You know, life insurance feels like a promise you make to your family. But what if that promise has a little asterisk next to it? In this explainer, we are digging deep into the fine print of life insurance exclusions, those specific reasons a claim could actually get denied, to make sure that safety net you've built is as strong as you think it is.
So you got life insurance for peace of mind, right? To protect your loved ones. But is that protection really, truly absolute? Well, the surprising answer is, it depends. And it all boils down to understanding those exclusions that might be hiding in your policy.
All right, to really get a grip on your policy, we have to start with the basics. What in the world is an exclusion, and why do insurance companies even have them in the first place?
Okay, so an exclusion provision. That sounds fancy, but it's just a clause in your policy that lists specific situations that are not covered. It's the insurance company's way of saying, look, we'll cover a lot, but we just can't cover these things. This is actually how they manage extreme risk and help keep policies affordable for everybody.
You know, insurers really have two main ways to deal with risk. They can use an exclusion, which means that if you die a certain way, it's just not covered, period. Or, what's actually more common these days, they can do a rate-up. This just means they'll still cover the risky activity, but you're going to pay a higher premium for it.
So what kind of activities are we talking about here? What could possibly lead to an exclusion? Let's jump into the most common ones, starting with, you guessed it, risky hobbies and lifestyle choices.
One of the oldest exclusions out there is for military service, usually called a war clause. But here's where it gets tricky. There are two very different kinds. A status clause is super restrictive. It basically says if you die for any reason while you're in the military, there's no coverage. A results clause, which is way more common now, only denies a claim if your death is a direct result of military action. That is a huge difference to be aware of.
What about flying? Well, here's some good news. If you're a passenger on a regular commercial flight, you are almost certainly covered. The aviation exclusion is really aimed at the higher risk stuff, like being a private pilot, a student pilot, or a test pilot. So if you fly for fun, your policy might have this clause.
And this same logic applies to all sorts of other activities. If you have a dangerous job, I'm talking about washing windows on a skyscraper, or a hazardous hobby like, say, scuba diving, an insurer might add a specific exclusion for that. Or, like we just talked about, they might just charge you a higher premium instead.
Now here's a really unique exclusion because it actually expires, the suicide clause. For the first 2 years of almost any policy, if the insured dies by suicide, the company won't pay the benefit. They'll just return the premiums that were paid in. But, and this is key, after that 2-year clock runs out, the exclusion is gone, and the full benefit would be paid.
All right, it's not just about risky activities that can mess with your policy. Illegal acts can too. Let's take a look at how breaking the law can end up voiding your coverage.
This one is pretty cut and dry. If you die while you're in the middle of committing a felony, the insurance company does not have to pay the death benefit. It's important to note this only applies to the person committing the crime, not any innocent victims involved.
And it's pretty much the same deal if a person's death is directly related to them working in an illegal occupation. Insurers just aren't going to cover the risks that come with criminal activity. It kind of makes sense, right?
A person's state at the time of their death also really matters. If the insured is intoxicated or under the influence of illegal drugs when they die, and that contributed to their death, the insurer can absolutely deny the claim.
Okay, I know these rules can all seem a little abstract, so let's look at a case study to see how this stuff plays out in the real world. Let's meet Robert and Carol, who are about to go on a scuba diving trip.
So here's the situation. Robert is a seasoned diver. He's been doing it for years. When he got his insurance, he was honest, he disclosed his hobby, so the company put a scuba diving exclusion right into his policy. Carol, on the other hand, is a total newbie. It's her first time. So when she got her policy, there was no reason to have an exclusion like that.
Tragically, something goes wrong on their dive, and both of them die. So, based on everything we've just learned, what do you think happens now? Which family gets a check from the insurance company?
For Robert, the outcome is just heartbreaking. Because his policy had that specific scuba diving exclusion written right into it, the insurer denies the claim. The cause of death was the one thing the policy explicitly said it wouldn't cover.
But for Carol, it is a completely different story. Since she wasn't a diver when she applied, there was no exclusion for it in her policy. And because scuba diving wasn't an excluded cause of death in her contract, her beneficiary gets the full death benefit.
This brings up a really important question, right? What if Robert had just lied on his application? What if he never mentioned his hobby?
Would his family have gotten paid then? Well, the answer depends on another key concept in every single life insurance policy. And that concept is the contestable period. See, for the first 2 years of a policy, the insurance company has the right to investigate the original application for any lies or misrepresentations. If Robert had lied and died within those first 2 years, the insurer would probably find out about his hobby and deny the claim because of fraud. But if he died after that 2-year period, the policy becomes incontestable, and the insurer would most likely have to pay the claim even if they found out about the lie later on.
So after all of that, what are the key takeaways here? What do you really need to remember to make sure your policy is actually going to provide the protection you expect it to?
Okay, here are the most important things to lock in. First, exclusions exist to manage extreme risk, and that's actually what helps keep insurance affordable for everyone. But it's good to know that today, a lot of insurers would rather just rate up a risky hobby instead of excluding it completely. The single biggest thing you can do is be totally 100% honest on your application. Because remember, an exclusion is permanent, but a lie is only a risk to your coverage for about 2 years. At the end of the day, you've just got to read your policy to know what's really covered.
So, we'll leave you with this one final question to think about. Does your policy protect the life you actually live, or just the one you described on a piece of paper a few years ago? Because the best safety net is always one that's built for your reality.